Good evening, everybody. All right, we're seeing a market condition that pretty much allows you to make much more clear assessments or evaluations of where a price trend might be heading based upon knowing what should happen after a candlestick signal or what should happen in a pattern. This basically, having this knowledge, takes the emotional stress out of trying to figure out which way the market is going. The wider screen looks better? All right, good. So, because we have high probability rules based upon candlestick signals, got the doji rule. We're sitting here in the oversold area. We got a doji right about the oversold area. Is this telling us that we're about ready to reverse? Well, we've got at least a good format that tells us the doji rule will move the market in the direction of how they open after a doji. So if we wake up and see the pre-market futures are showing the market's opening positive, then there's a high probability they're using this level as a support, which means your trend channel is now in effect. And where would we think our first target would be? At least coming back up to test the T-line. So you add that same scenario to the NASDAQ, a bullish harami in the oversold area. If it opens positive, where do you think the next likely target's going to be? Coming back up here to test the T-line area. So knowing what patterns are being put in place, how do I do this trend? We can pretty much see what's happening here in the oops, that's not what I want to do. Well, Shazam. You can pretty much see there's a wedge type formation. Now, knowing that there, and this is in crude oil, knowing that, we can make a couple of assumptions. One, that until it breaks out one way or the other, we can pretty much conclude that the crude oil prices are stuck sideways in this wedge formation. And we can also conclude that if they move in one direction or the other, there's going to be a strong price move after that consolidation wedge type move. Let's see, what else was I going to illustrate? So this is, well, Shazam, we're just, this is where knowing the little nuances of how investor sentiment works is greatly a huge advantage for us. Look at your big bearish engulfing signal, down move. Look at your evening star signal, down move. But even more convincing is, well, it traded lower, but it traded up. What to do? Is that going into a wedge? Well, the next day when they gapped it down at the previous day's open and started trading it lower, we already know that that bearish kicker type signal after a sell signal with stochastics heading in this direction gives us a much higher degree of probability they're selling this one off. So you can use that same, same assessment here. Which way do you think cattle is moving? And I'm pointing these out because I watch these during the day. I have no idea. So if you're trading futures, Raymond, the first step each day is say, which way do we think this one is moving? We really don't know. We want to find the charts that tell us we've got a high probability move in one direction or the other. Is it coincidence that the month of lean hogs makes it L-Ham? Jay, I can see you've got way too much time on your hands. Okay, now what am I trying to do? Okay. Oh, this is not going to work. Dang. For some reason, I don't know why this is. Huh. I wanted to illustrate YMM. I guess I have to do it real quick over here. You can see the best friend signal. So, anytime we can see this type of situation, a best friend signal, this is why not only knowing the signals, but knowing the high rank, top rank signals and patterns like the best friend just gives you that much better probabilities that you're going to be in the right trade at the right time. That's not the futures. Okay. All right, now let's get back to it. And we recommended FRGE because you could see it setting up. Look at your big inverted hammer. And look at your bullish left-right combo. Look at your curvature. Now, this is what we call 2+2 analysis or convergence analysis. Look where your inverted hammer started, right smack dab after 3 dojis, right at the 200. Stochastics coming up. This is the most basic oh yeah, the YMM is the Dow futures, but for some reason YMM, the stock, doesn't come up over on this system. So, convergence analysis, 3 dojis, oversold area, an inverted hammer, bullish left-right combo. Buying has started. This was up, what was it up, about 45% today? This is, and I'm going back to kind of the basics, that when you start adding everything up, this greatly takes the guesswork out of your trading. And the reason I point this out is because being the worst investor in the world before candlesticks came along, what did I say, the best investor, being the worst investor in the world, before candlesticks came along, when I started seeing what investor sentiment does time after time, it basically gives me that much more confidence that I might not even know what this company does, which I don't. All I know is somebody's buying it. So I'm going to go back here because I'm going to stand on the soapbox here for a second. I flipped to one station this afternoon just to see what the earnings were going to be on some of them. I think it was CNBC. They have a panel, and their question was, is there a recession coming? And this is why I feel smug or aloof to all these analysts. And I forget who the analyst was. He's well known. He's on their program all the time, and he might even be one of their announcers. But they said, is the recession that is now projected to come in 2023, is that going to be moved forward into 2022? And his answer was, if everybody is expecting a recession, it usually doesn't happen because everybody's getting ready for it. And I'm thinking, that's kind of convoluted, because if everybody's expecting a recession, they're getting ready for it by either slowing down their purchasing, slowing down their inventory, doing everything to get prepared for a recession, which basically is a stimulant that causes the recession. So the reason I kind of smirk at that is it doesn't matter what everybody, even supposedly the experts' opinions are. The only thing that you really want to watch is to see what everybody's opinions are, which is built into candlestick analysis. So you'll often hear me profess, don't listen to anybody. Let the charts tell you what is everybody's decisions. There's only one true indicator out there, and that's the markets themselves, not what everybody's opinion is. So that was my soapbox. So there's a lot of good charts showing up. Big B. Now, here's another soapbox issue. I would have never found this one. But that's the nice thing about having a chat room, that where everybody's kind of looking for the same signals and patterns using the same indicators. That becomes a good, strong chart. I would not have found it on my scans because I don't scan for stocks less than $5. But that becomes a very viable trade, because now, because of the chat room, you've got everybody looking for the same signals and patterns. 2+2 analysis. Evening star sell-off. There's your inverted hammer, doji, bullish confirmation. What's that telling you? That's where everybody decided to be buying. That inverted hammer becomes your high probability trade setup. Now, I often tell people, don't try to learn all of it all at one time. You might use 3 or 4 different signals and patterns to kind of get yourself acclimated to where the high probability trades are. That's not to say you don't try to learn them all, but learn 3 or 4 with great detail so that you know exactly when to be buying, exactly what it should be doing, and when to be back out of that trade. So this is what got me to learn to take the emotions out of my trading. What's the probabilities of this trade? Well, the inverted hammer won. In fact, they did it right off the 50, number 2, close above the T-line, number 3. If it opens positive, that's telling me they're confirming. Correct, Magic. So, but a major aspect of learning what human nature does time after time just provides that much more probability factors. This is clove. That inverted hammer basically indicates, and again, this is from my statistical analysis, nothing computerized, just from 30+ years of watching candlestick signals. We know if we see an inverted hammer and bullish confirmation, the probabilities are 95% or better that you're going to be heading in the right direction. All right, thank you, BR. So there's your potential bobble breakout, J-hook pattern. What would confirm this trade? Well, everybody and their brother can see that it's stopped right here at the 200. If it opened positive, what's it telling you? If this little J-hook pattern is working, you can be buying immediately. And this gives you another positive aspect to analyzing when something is breaking out and the pattern is performing. If this opens positive tomorrow, I'd be a buyer. And then where would I close it out? If it turned around and closed back below the 200, because why is this pattern working? Because it's breaking out through the 200. This goes back to that, sage advice to let your profits run and cut your losses short. But nobody ever tells you how to do it. The graphics, the candlesticks tell you exactly why you're buying, what it should be doing, and what it shouldn't be doing. Oh, I gotta keep doing this. Again, bullish engulfing signal. Right smack dab off the 50. What's, yes. Did I do it right? Yeah. And why is this relevant? Because human nature is, if they break through a resistance level like the 50, they'll come back and test to see if that 50 is going to act as support. Okay. If it does act as support, number one, we can see that it's acting as support because of the bullish signal. But what does it also tell us? That everybody that's watching this and started buying at the 50 was buying because they were confident that it wasn't going down through the 50. That gives you that much more probability they're going to take this one up higher. You can learn the message pattern. What does a message tell you? There's some great new enthusiasm coming into the price of this stock. This is FIVN. But what happened? First initial move, they were taking profits. All right, thank you, Kelly. And then what happened? The profit taking's over. What's this bullish trading illustrate? That the great enthusiasm that came into this, and there was profit taking, the profit taking's over, that great enthusiasm is now kicking in. Same scenario on Zyme. There was your message. Gap up from a doji, profit taking. If I was buying this, I'd probably put a buy stop just above the open of the other day and the high of today. If it comes up through there, what's it telling us? They're still buying this one. So all these, I guess I should do this. I've had some people ask, I think that's it. I think that's the information on our private training session that we're going to be doing this on the May 20th through the 23rd. Again, these are approximately 5 people in these sessions, and it's a 2.5-day training, but it's not a training where you're going to learn anything new, because everything we go through in these trainings you've already seen. We're just going through it in detail, and this allows each person that may have some sort of bugaboo in their trading to get that worked out. And the reason I used to do one-on-one, but with one-on-one, if somebody gets tired and they're just sitting there watching, it gets pretty lethargic. With about 5 people, more than likely, somebody in the group is going to ask a question that everybody would be interested in, or they'd ask themselves if they weren't brain fried at that time. So it keeps the training very active as far as getting new information or kind of clarifying things that help everybody in their getting, I don't want to say the bugs out of their trading. So if you've got any questions on the price, what you get out of it, the bonuses and that sort of thing, just email me, steve@candlestickforum.com with your phone number, and I'll get on the phone with you and we'll walk through to see I would say whether it's worthwhile. I haven't had any complaints in the last 15 years or maybe 18 years now that I've been doing this, and we've got a lot of people out there that have taken the information that they've gotten out of these trainings and gone further. As a matter of fact, Rick Sadler of Hit and Run Candlesticks was one of my first private training people. He was the one that came up with the T-line. So you gain a lot of insights to the point that not only can you, I'm available most any time, but usually Vincent, I'll get back. Cindy Lou, Cassie, I'll be giving you all a call tomorrow also. So if you just send it, usually in the afternoon, maybe around 2 or 3 o'clock Eastern time, I start calling people so we can talk for a little bit. NVAX. Inverted hammer, bullish confirmation. You're probably going to see this on the recommended list tomorrow. This is a good want as far as high probability trade results. Stochastics oversold coming up, inverted hammer, bullish confirmation, up through the T-line, breaking this downtrend. Where do you think your next targets are? Up here. The oil stocks were acting better today. Occidental, a bullish engulfing signal, right on the 50-day moving average. Where do you think the next likely target is going to be? Probably at least to the top of this channel. And that's why Valero, when it did the Morningstar signal, J-hook pattern, also acting well. Oh, Momo, you mean to tell me that you've been on here for as long as you have and you don't know where the stock picks are each night? I put out a 2-minute video kind of doing a brief review a brief review of what we think the market's going to do, and then I usually put out 2 or 3 stock picks. Now, if I think the market's going up, you're probably going to see 3 bullish recommendations. If we think the market is heading down, maybe 3 bearish recommendations. Most of the time would be 3 bearish recommendations and maybe 1 bullish recommendation. And if we don't know which way the market's going, we might see 2 bullish recommendations and 2 bearish recommendations based upon how the market opens the next day. Jim, or anybody, do you have the link for Momo so that you can find the picks every night? FUV, another one. Doji, gap up. Here's your likely targets. Oh, sometimes they come out late afternoon, but usually I'm tired. Usually they'll come out somewhere around 10 o'clock that night. But obviously, most of the time, if I get them done early enough, Abe will get them on so that they're on well before the market opens. Okay. What else we got here? Somebody pointed out RDBX. Look at your best friend, fry pan bottom J-hook pattern. Just an example of what creates those big price moves. Cisco, or CISO, another one that has a nice fry pan bottom that bottomed out with dojis, now makes for a very easy entry. Darn, man, let's see. Makes for a very easy entry, very easy entry. What? Okay, do it. All right, so it's kind of broken that downtrend. If this opens positive tomorrow, what's it telling us? This slow curve is now breaking out through the 50. It can be bought. So there are a lot of good trade setups. Look at here, a wee little teeny kind of inverted hammer. So where do you think at least your first target is going to be on this one? At least to the T-line, then you can see if it goes to the T-line, what's your next target? The 50, fill in this gap. So the more pieces of evidence that we can put on our, or into our visual analysis of where our target is, what the signal is, another inverted hammer in the oversold area, you could be a buyer of this one on positive trading. DMTK. Whoops. Inverted hammer. Doji, if this opens positive tomorrow, where's your next likely targets? Up here. So the reason I'm pointing these out is I've got 5 or 6 inverted hammers today, which is an unusually high number. Usually you see an inverted hammer once every couple weeks. But there's a lot now. Inverted hammers, gravestone dojis, whatever you want to call it. It's showing that there is now money starting to come back into the market, or buying starting to come back into the market. ERAS, inverted hammer, bullish engulfing. Another one where if you're buying, you want to see if it can break through this level. Inverted hammer on EV. Another one that if it opens positive, the probabilities are pretty strong you're heading in the right direction. IGMS. There's kind of your basing. Now, oh, I know what I was going to go through. No, I'll get to those in a minute when we go to the shorts. But that's kind of your cradle pattern, kind of. At least you can see they're basing here at the 50. There's kind of your cradle pattern. Series of dojis, inverted hammer, bullish confirmation, at least up here to your first target, and then your second target, which would also be filling this gap. There's your scoopish type pattern. Whoops. Oh, come on. So you can see kind of the scoop pattern, and it's basically breaking out. This one can be bought on positive trading. DJ, I don't even look at the VIX. The things that I'm looking at are based upon the market and the individual signals. Now, that doesn't mean you can't use the VIX. Whoops. DJ, there you go. Okay. If you are not getting the link to the morning picks, is that the same thing? I think that is the VIX for this system. What am I doing now? Oh, Adam. So here's one of those little nuances that you wouldn't get a hold of until it's pointed out to you. I think this actually opened right up about here yesterday and came down. So a very high probability trade, if you see a strong signal, and then you see after the signal it consolidates, you can buy right back at that level. Because if it comes back up through that level, that's pretty much telling you the initial profit taking's out of the way, the buyers are still there. Yeah, I don't know how to get the VIX over on this system. Okay, on the short side, this is what I was illustrating in the YouTube today, that there are times when you can start taking profits even though you're not above the T-line yet. Because if you're in the oversold area, let's say you were short, which I was, notice what was your first warning. Notice how they kind of gapped down that doji in the oversold area. What should we, if we're short, what should we see the next day after that doji? Trading in this direction. If they gap down in an oversold area, first alert, if they open up positive and start trading positive, especially trading it back up above the high of that doji in the oversold area, close it out. And so even though you haven't closed above the T-line, what are the probabilities telling you at this point? You're starting to see buying in the oversold area after a strong downtrend. That's probably a good time to start taking profits on the short trades. Netflix obviously got obliterated. But what do we see now in the oversold area? Buying, selling, buying. Let's make this bigger. What's that telling us about our probabilities? There's buyers starting to step in at this level. So if you were short, get ready to close out this position, even though it hasn't closed above the T-line. The graphics of the charts are telling you there's buying coming in at these levels. Ever, if you were short, that first major signal, or even this level right here, becomes your stop. Now you got a bullish engulfing that's telling you you might want to start looking to go long, which means if you had been short, you definitely do not want to be in a position where the chart's telling you it's time to start going long. Who did this? I don't know what happens there. So this is the type of thing I look for. Right in here, right at a potential support level. You start seeing there's your bearish double doji. That was the same reason we recommended going short on EXPO. There was your kind of your double doji gap down. And what did the trading of yesterday tell us? They were still selling off pretty strong, and the 50-day moving average was not going to be acting as a support level. All right, so AMGN was that bearish best friend gap down, but it traded positive. So that's like an inverted message. Then when it came back down through this level, what's it telling you? That selling pressure is still there. Where do we think the next likely target is going to be? Probably down here in the at the 200. Same scenario on this one. Natty, bearish trading, kind of a message, backwards message. However, that strong selling and then profit taking on the short side, when they started selling this off again, coming back down through this level, what did that indicate? The strength of that selling was still in effect. And CLVT, oh man. I don't know why that's not coming up. There's that little failure. Bearish J-hook pattern. Where do you think the next likely target's going to be? Here. Wave 1, wave 2, going into wave 3. So every time we look at a pattern or a signal and the indicators, when you add it all up, and it's not like you have to sit here and analyze it, you can see instantly. There was a bearish engulfing signal at the T line. Today they failed the 50. We can see the bearish J-hook pattern. So it's not like you have to sit here for 3 or 4 minutes and say, what is this doing? It's just one instantaneous glance. Well. Whoops, that's because I typed it wrong. BR. There's that little bearish J-hook pattern. Next likely target, down here. So right now, we don't have anything to tell us yet that there's a change of investor sentiment. Oh, tomorrow, what is tomorrow? Is it tomorrow or is it Wednesday? I thought it was Wednesday. What is today? Monday, right? All right. So the assumption is they're going to raise rates a half a point. So that's already built into the market. So why is watching what the market is telling us more important than what all the prognosticator projections are? Because the market is going to tell us what everybody thinks when a action occurs. So if they raise the rates a half a point, which everybody's expecting, what could that do to investor sentiment? You might see a bounce because they did what everybody expected. But then there still has to be the reality of if they're raising rates, and because inflation is around, buying this market may not be the prudent thing to do if that is overhanging the market. So that's why watching to see where the indexes trade or close is more important than trying to figure out what's going to happen. Bill, that's true. Yep. I always ask, because Wall Street gravitates or accept things that work. That's why you see some of these trading methods or trading strategies come and go, because when people try them out, they don't work. So there's one truism on Wall Street. If something doesn't work, it disappears very quickly. Is there a recording of Saturday's video presentation? Yes, somewhere. Yeah, you still have to see what the markets do at the end of the day. If you suspect the market has more than priced in the Fed, it may be time to buy. That could be, except does anybody know whether they're going to raise the rates 3/4 of a point at the next meeting? Can you explain the message signal? Yes, I can. Maybe not very well, but I can. The message is merely an uptrending move so if you looked at this situation, you can see they brought it back down through the open and they were still selling. That doesn't look very bullish. Graphically, that looks pretty bearish. However, what was the message? The message was they gapped this way up. A lot of buying came into this, and there was profit taking. But the underlying message was they came in with great enthusiasm. So what do we look for in a message signal? We're looking for the profit taking to be over, and that essential or initial strong buying now kicks back into place. So this is just a message to say, even though it doesn't look good, get ready for the profit taking to be over and buy that next uptrend. What was the other one? Oh, Zyme. Kind of the same scenario here. Doji gapped it way up. Lots of enthusiasm for some reason. It's usually some sort of announcement. But they sold it off. Today they traded it back up. What did that tell you? Yesterday's profit taking after, or Monday's, Friday's profit taking after that great enthusiastic buying is over. Now the buyers are stepping back in. So that becomes one type of signal. It's the same as a best friend signal, except a best friend signal would open here and trade up here, giving you a green candle, whereas the message still implies the same thing. There was lots of new buying enthusiasm coming in. Now you just have to wait to see when that profit taking of that initial buying is over. Then it will usually create a good strong price move. Okay, I think that's about all I got for tonight. So with that, are there any general questions on candlesticks? Whoops, sitting here. Yeah, it also works on the downside. That wasn't it. You can see how they sold this one off, but they closed it above where they opened it, so that showed there was buying, but there was strong selling. And then as soon as we saw it trade back below this level, we started shorting it because that told us that strong selling was still being confirmed. Vince, yeah, you could do that if you put those together, but you don't have to. You can see that one was selling, the other one was continuing the buying. Robert, remember, we're not necessarily buying because they were trading above the T-line. Remember what the number one criteria is for an inverted hammer. I'm sorry, I said that wrong. What the number one criteria is for candlestick analysis. The signals, the T-line just happens to be a good confirming indicator. So would I have been buying this one today? If I was aggressive and I saw it, yes, I would. Where would I be buying this one? Well, now because it closed at the T line, if it opens positive, what's it telling us? It's confirming the inverted hammer confirmation, number one, and number two, it's telling us the T line's not acting as a resistance anymore. Momo, you could stay in cash. Please read my 8:46. Oh, I can't even see the times on here. Vincent, 8:46. Now I got to get my magnifying glass out. That was a kicker. Oops, there's a bunch here I didn't see. Everything depends on inflation data. Yeah, but I think that's, I'm making money going long right now. Okay. Kathy, yeah, but we're not investing seeing whether it's going to make anybody happy or unhappy. We're investing based upon what the results are of events. Vincent, I don't know what that was referring to. Is that was a kicker? Message works to the downside also. Mohawk. Well. That is a message, yes. So you could be buying this one on positive trading. So this is why you want to learn specific patterns and know exactly what to do. If I was buying this one on positive trading tomorrow, where would I set my stop? Probably right here at that open, because if this opens positive, what should it be doing? It should be going in this direction. It shouldn't be going back in this direction. Okay, let's see, for Zyme. Oh, for Zyme, okay. Is that a kicker signal? No, that's not a kicker signal. That's your message. When you hoarded, were you oozing put spreads? Kath, I think there's probably something wrong with your S. That's an S, not anything else. It sounds like that. That's like, how do you top a car? You tip on the brake, stupid. If you buy, okay. DMTK, all right. We did that one. So, yeah, so the question would be, if I was buying this one on positive trading, I wouldn't want to see it close back below the T line. Ronald, two factors. With an up whipsawing going on in the markets, how do you decide whether to enter a trade? I wish I could bring YMM up. I'm looking for high probability trade setups. There's even when the market is whipsawing. Remember, you've got 9,500 trading entities out there, which means on a quick scan every afternoon, within 20 minutes, even if you don't know what you're doing, within 20 minutes you're going to be able to find 5, 7, 10, 12 good bullish trades. At the same time, if you flip the scan around and find the bearish signals, you're going to find 5, 7, 10, 12 good bearish trades. So if you don't know which way the market is going or whipsawing, now you can take those 10 good bullish trades and cultivate them to see which one is the most strongest likely to work, or on the other side, which one is the most weakest with the strongest bearish signal. So there is a learning process, which isn't that difficult. First of all, you want to learn the 12 major signals. Those are your bread and butter bricks to learning candlestick analysis. Then you want to learn the patterns. There's about 6 or 8 patterns. And those are all very recognizable as far as visually. And then there's about 15 combinations of those, like your doji gap up, your best friend, your left-right combo, a doji followed by a bullish engulfing. So once you've learned those, and then you start doing your own, emphasizing which signals or patterns you want to be really learning and kind of take advantage of. And I usually, if I'm looking at 4 trade setups, I'm usually looking for the best friend, the kicker signal, a fry pan bottom breakout, and a J-hook pattern, more specifically a bobble breakout. If I've got 10 positions on, I'm pretty assured that I'm always going to have positions in place, and that if I'm only looking for 4 specific signals or patterns, I'm always going to have a supply of trades much more than I can handle or need, which means now I can go back and cultivate which ones out of those signals or patterns that I like are going to produce the strongest results. And then after that, if I've got a trade on, now I just got one simple analysis. I stay long until I see a sell signal and a close back below the T-line. Okay? Amazon had a hammer signal. Yes, so, and look how far away it is from the T-line. You're in the oversold area, but you don't have anything yet showing buyers have come in. May have been some consolidation today, but you can see how you're rolling over. So if you were short, how long do you stay short? I'd probably pick a spot like halfway up that candle, that if it came up through there, that means the buyers have stepped in. If you buy TMT or DMTK over T-line on positive break tomorrow, would stop the under today green candle low? No. If I can DMTK. Oh, pshaw. Didn't type it right. DMTK. No. It would be, my stop would be probably at the halfway point of this candle or a close below the T-line. Shorted Yeah, okay. Oops, now I forgot the question because I was making fun of you. Kathy, now I have to go up and see what you, when you hoarded, oh, there's a, yeah, I try to do spreads in stocks that are already well oversold. However, remember there's a major logistics problem with spreads, and that is both sides have to be executed at the same time. And if you don't have a lot of volume in the, let's say the puts, let's say you were doing a, let's see, what is that one? Let's say you were doing a 235, 230 spread. And the 235s were trading an average of 300 contracts a day, but the 230s were only trading about 20 contracts a day. Well, that might mean you're going to have a difficult time getting both of them done at the same time. Now, fortunately, on Thinkorswim, it'll show you what they can do the spread at. And let's say they could do that spread at $1.80. I mean, you just put in that you want to do a vertical spread, and it will show you what price they can do it for a 235, 230. Let's say it's $1.80. Well, if I think it's going to be difficult, I'll click on it and say, all right, do it at $1.80. Well, after 5, 7, 10 minutes, they haven't done it, I might come back and say, all right, do it at $1.85. And if they can't do it in another 5, 10 minutes, then I close it out. Because if it's that difficult to get into the spread, it's going to be more difficult getting out of the spread. Yes, well, that's the other side of this analysis. The assumption is, as long as you are still below the T-line, even though you're seeing buy signals, you still have to have that confirmation. Okay, running through the biggies. Amazon, still trading lower, hasn't shown anything that tells you there's any great reversal yet. But you also can make the analysis, look how far away you are from the T-line. You're in the oversold area. Maybe if I'm short, I put a buy stop at the halfway point of that candle. Apple, same scenario. Tomorrow the T-line will probably be down here, so I wouldn't want to see it trade up above the 200 and the T-line tomorrow. Oh. Well, got fingers like... NVIDIA. What are your probability factors? You're starting to see buying down here in the oversold area. If I was short, I'd be covering my short position because even though we haven't had a close above the T-line, we're seeing buying down here. Same thing with Netflix. You haven't had a buy signal and a close above the T-line, but you can see in the oversold area it's starting to show some buying coming in at these levels. Tesla, just absolutely nothing. Don't know whether they're trying to take this down or take it up. I'd be someplace else. Top 100 is a gold mine. Top 100, all right. Okay. Any other general questions on candlesticks? If not, Jim, go ahead and do the double line. And in 3.2 seconds, do the next double line. Yes, you'll have to see whether the volume on NVAX on a call spread. Yeah, check the volume. I don't ever put the volume over here because usually I'm already looking for things that surpass the volume. And neg, nothing of any great consequence yet. You still need to see some strong buying. You can see that it's supported at the 50. So you need some more confirmation. EXPE. Doji rule. Oh, up after hours on earnings. Okay, let's see. What was that on? EXPE. It's not up big. Yeah, that's what it's done after hours. So I wouldn't consider that anything real extravagant. So you still want to use the doji rule on this one. Is that the one that was? No, that wasn't it. But there's your doji sandwich setup. So you got a nice reversal, bullish harami, hammer, bullish confirmation, a doji. Now this is not unusual. But after a big move, you see the doji. That's consolidation. That's the remaining people that were selling into the downtrend. But now you want to see who's going to win, the bulls or the bears, which in this case, we know that if it opens positive, it's going to trade positive. You could be buying that immediately. Viru, stay short. Overstock. That one you can get ready to buy. There's your bullish left-right combo. You broke this downtrend. First target, second target. Tizu. That's a very nice chart. There's your J-hook pattern supporting right at the 50. There's your gap to fill up here, at least getting you in the right direction. There's your next likely target. Good chart. I think we did this one. There's another one that if this opens positive tomorrow, you could be buying this one. Upstart. Bullish left-right combo. Inverted hammer. This one you could be buying. There's a wee little gap right here, meaning they're probably bringing it back up to the 200 or up to the 100. Unity. By looking at the right one, Walter, stay long. I wouldn't. Stay short, maybe. Nothing on this one that would make me want to go long yet. Boeing, stay short. Use your T-line rule. I would probably put a safety stop at yesterday's open. Myra, get ready to cover shorts on positive trading. Matador, stay short. Nothing there yet. APT, that one you can get ready to start buying. This is your three white soldiers. There's your morning star signal. Three white soldiers is a bullish candle, a lower open, bullish candle. Lower open, bullish candle. That one you could be buying on positive trading tomorrow. Roku had a good day. Another one that bullish engulfing. You could be buying this one, heading for the 50. And Home Depot, that's a nothing chart. Would not be long or short. Not going anywhere. this a Russell, home construction, same thing. Sideways, would not be in this one at all. Run, bullish engulfing after a series of indecisive trading. That one you could be buying. The SPY, Doji rule, see how it opens tomorrow. The Russell, same thing, bullish Harami, see how it opens tomorrow. SOX, that's the bear fund. So if things trade positive, look at your hanging man on this one, heading lower. Stay short on this one. MGM, nothing, sideways. Whoops, that's not what I want. Las Vegas Sands, same thing, kind of sideways. And Wynn Resorts, same thing, nothing there. RGTI, you stay long. Obviously, you need to see this get up through the 200. And Facebook, another one you could be buying on positive trading after that best friend gap up. Philip Morris, stay short. Freeport, Freeport, get ready to short this one on weakness. If they open this lower, you've got a bearish doji sandwich, failure at the 200, bearish J-hook pattern. We did Las Vegas Sands, nothing wildly exciting on that one. What have I done? Same scenario, your doji rule. See how they open this one tomorrow. Momo, we've done this one at least 3 times today. You buy this one on positive trading tomorrow. The Qs, same scenario as the NASDAQ, obviously. See how they open this one tomorrow. The SPY, see how they open this tomorrow. Gold, still in a downtrend. Notice that little bearish kicker signal. That's very indicative of the strength of the sellers. And silver, there's kind of that gap down, you just stay short on silver. Lift, just stay short. Oh, Carvana, even though it traded positive today, is still in this slow downward drift. I'm trying to think what other shorts there were. Let's see, Expo still short. All right. AMD. Not a real pretty chart, but I wouldn't be short and I wouldn't be long at this point. Would want something better. SMHI. You could start buying this one. On the NASDAQ. Oh, that kind of double doji. Yeah, that is that weak signal with them opening lower. So that's why I'm not real confident that they've turned this market around just yet. NVIDIA, nothing. We did all these. Apple, nothing yet. Stay short if you're short. And AMD, wouldn't be long or short. INOD, scoop type pattern, you can be buying this one on strength. DraftKings, kind of a cradle pattern. You could be buying this. It needs to break this downtrend. I'd want to buy this on definite strength. If I was buying on positive trading tomorrow, don't let it close back below the T line. The diamonds, oh, well, for crying out loud. Diamonds, same doji factor. And the Qs, same bullish harami. Okay, MGM up after hours. You could buy this. It's just not a very dynamic chart. I'd probably be someplace else. An IMO has to, if you want to stay long on this or go long, it has to open positive. If it opens lower, you don't want to be in it. All right. It'll be important to see how they open these markets tomorrow. So with that, let's see. Somebody's still asking about the private training session. Here's the information again. All right, everybody, we will see you bright and early in the chat rooms tomorrow. We'll see you then.